Good morning and welcome to the Killik & Co market update. This week, LVMH and Tiffany have announced they will be suing each other after LVMH decided to walk away from its planned deal to buy Tiffany. The deal was announced at the end of last year and it's worth $16 billion, which makes it the biggest ever deal that has been agreed in the luxury sector. The deal was agreed at the end of last year, and clearly a lot has changed since then, and you can imagine that LVMH no longer wants to pay the same price for Tiffany. LVMH announced this week that it was stepping away from the deal following an intervention by the French government. LVMH is based in France. There has been a lot of speculation in the media about whether or not this is true, and Tiffany has announced that it will now be suing LVMH for breaking the terms of their contract. In retaliation, LVMH is suing Tiffany, claiming that the management mismanaged the business throughout the coronavirus crisis, for example by continuing to pay dividends despite the fact that the business was making a loss. We'll have to wait and see what happens here. It is still possible that a deal could be forced through, and it is generally agreed that LVMH and Tiffany would be a good fit as long as the deal can be agreed at the right price. Let's take a look at what the two share prices have done following the latest revelations this week. Here's the share price for Tiffany in dollars over the last 5 years. As you can see, there was a big spike in the share price at the end of last year when the deal was first announced, but the share price has come off a bit over the last few days following the announcement that LVMH could be stepping away. The deal was due to take place at $135 per share. The shares are currently trading at $114 per share, so that does show you that investors believe there is some doubt about whether or not the deal will go through. However, the shares are still trading quite far above where they were before the deal was first announced, so that does show you there still is some hope that the deal could possibly still be salvaged. Let's take a look at LVMH. Here's the share price over the last 5 years. You can see, as with most companies, there was a big share price fall in March when the market crashed, but since then there has been quite a notable recovery. Hasn't been much movement in LVMH shares over the last week since the legal action was announced. And that's possibly because even though $16 billion is a significant deal, it's possibly not hugely significant for LVMH, which has a market cap of over 200 billion euros. The story is still very much unfolding, and we'll be keeping a very close eye on what happens between these two companies. This morning, the latest GDP, or gross domestic product numbers for the UK economy were announced, and they showed that in the month of July, the UK economy grew by 6.6%. To put that into context, let's have a look at the monthly GDP index for the UK economy going all the way back to the year 2007. As you can see, there was a huge crash in UK economic activity during the lockdown period, but since then we have recovered quite a lot of that lost ground. And this is what people are talking about when they talk about a V-shaped economic recovery. If we can quickly recover our economic activity back to where it was in February, then this chart will look like it's V-shaped. At the moment, it's almost showing half a V, so we'll have to wait for the next few months' worth of data to really get an idea of how quickly our economy is recovering from this coronavirus crisis. And finally this week, the UK government is trying to override the current Brexit withdrawal treaty, which would actually be a breach of international law. Clearly this doesn't reflect well on the UK, and as a result we have seen a weakening in the value of sterling. Here's a chart showing the value of sterling against the euro over the last 2 years, and as you can see there has been a clear weakening in sterling over the past few days since this piece of news has been announced. We'll have to wait and see what happens with this, but in the meantime, anyone based in the UK who has an overseas portfolio will have seen their portfolio rise in value as a result of this weakening in sterling. Moving on to have a look at next week, it's fairly quiet in terms of corporate reporting, but we have got results out from online supermarket Ocado. That's it from us. Have a great weekend, and we'll see you next Friday.